the way it works in the development business is the longer you hold the land, the more money you make. And so the sooner you sell, you can still make money, but you make less money. So like, well, we don't need to sell this property right now. Let's go to the next level and do the horizontal development. Well, once you do that, you're like, well, can't we keep some of it and do the multifamily side of it as well? And that's where we stand.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Paul Thompson has been featured in numerous real estate podcasts and hosts his own podcast called Ready Investor One, where he teaches the mindset of real estate investing. Paul, welcome to the show.
Thanks for having me, Sam.
Absolutely. The pleasure is mine, Paul. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Where did I start? Cut my teeth in multifamily. Cut my teeth with single family and have since gone to multifamily. I did that as a way to escape my day job. I was a corporate guy. I recovered. I'm still recovering, I think, from being a corporate drone. And so now I have a portfolio of single family in Little Rock, Arkansas, where I live. But now I'm doing multifamily development and syndications in the Dallas-Fort Worth market.
Wow. That's a big jump. What was the thing that really compelled you to say, all right, we're going to go do something bigger?
Well, I bought and sold a lot of single family. Like I've gotten really good at doing that. If it can be done in single family, I've probably done nearby all of it. And it became kind of pedestrian to me. And I was playing it a bit safe. And if you really want to scale, which I did, then I wasn't sure that buying 100 single family properties was the best play. And I wanted to jump off in the deep end. So instead of just buying an apartment complex, I decided to do a ground up development. So I really went for it.
Wow. Okay. So you took on the ground up development project on your own. You said, all right, we're going to do a ground up development. It's a multifamily property.
Uh-huh.
Whoa. Walk us through that. I mean, that's ambitious. Like that's, I mean, just to get lending, to get investors, to get all those things lined up, you had to do a lot of things right. What were they?
Yeah, I'm still in the middle of it. So we'll give you a full report in a couple of years when it's all said and done. But the learning and the process so far was that I was a member of a mastermind where we were working on mindset and trying to figure out, kind of what our bottlenecks are and kind of designing our life. And I have a good life. I have nothing really to complain about, but I felt like I had the potential to do a lot more. And I met a really good friend. He and I are still business partners at this mastermind. And he said, I live in Dallas and I feel like we're in a good market. I really want to get into this land business. Interested in, since you've done a lot of wholesaling and flipping and stuff, you kind of know the marketing side better than I do. And our values aligned, and we're still, I consider one of my best friends in the world, and talk to him on a daily basis. And I really enjoy that business. So that's how it started. And then it evolved from there to, well, we've got the land entitled now. I mean, like we could just sell it, but the way it works in the development business is the longer you hold the land, the more money you make. And so the sooner you sell, you can still make money, but you make less money. So like, well, we don't need to sell this property right now. Let's go to the next level and do the horizontal development. Well, once you do that, you're like, well, can't we keep some of it and do the multifamily side of it as well? And that's where we stand.
Wow. What was the timeline from, hey, here's an idea, to when you identified a parcel that you said, hey, this is a place where it will work?
It probably took 3 or 4 months. We made lots of offers, not knowing we were doing. We did I come from a kind of a wholesaling marketing background, so I can do that. I don't necessarily say I enjoy it, but I know how to do it. And we sent lots of letters to landowners, and we ended up finding a friend of ours that had a property. He's in the business, and he had a property. He said, this is a small one for me, probably smaller than I care to fool with. Would you guys be interested? You'll pay me an assignment fee, but I'll show you the ropes, and here's a good project for it. And that's been all we needed, because that has then kind of dovetailed into a couple other deals.
Right. So were you guys marketing for off-market land then?
We were.
Gotcha.
Yeah.
Okay. So yeah, I was wondering, I'm like, if you're going to, again, if you're in the DFW market, there's a property on the market. I mean, getting just the credibility with the brokers and with the sellers that says, hey, we're going to take
It's hard. Yeah.
Yeah, it would be hard. So finding it off market's probably a little bit smarter way to go about that. So you had the idea. 4 months later, you acquire the land, and then you're like, okay, we're going to go through entitlements. What are some things that you learned that maybe you wish you had known early on about entitlements?
Lesson number one: you don't buy land unless it's entitled. You can get it under contract, subject to getting it entitled. And that's the way we do it now. But the first property we bought a little too quickly, and it ends up, we're going to be okay with it. But we had a surprise development in the middle of our process that the city didn't really want to do what we want to do with it. So we had to, I mean, it's what they call, it's in the county, or in the Texas, they call it the ETJ. And it was kind of out in the county there. And that gives you options. You can annex into the city, or you can stay in the county. It gives you some options. And basically, we're running into some hassles with the city, and they're not. They say they want to do all the things we want to do, but then when it comes time to negotiate what they call the developers agreement, they're like, "Well, we don't want to commit to anything." It's like, "Well, I'm not going to annex into the city unless you commit to something." And that's the process of entitlement, is dealing with the cities and going through the legalities and negotiating with lawyers, who everybody typically means pretty well, but no one person has the say. So you're having to kind of like piece all these things together. And even the people you're interfacing with the city, they're the city planner or the city attorney. They're not the city. They're just like employees of the city. And so it's this really weird dynamic where you're trying to get the council to agree to something, but the council has no idea what you're doing because they're not involved in the conversations.
So how do you work around that?
Well, you fight with the city planner. I don't say fight, but you have very pointed conversations with the city planner and especially the city attorneys. And you're like, no, the city does want to do this because they're going to get tax revenue. Does the city want tax revenue? Well, of course they do. Okay, well then this is how they get it. And you just have to play that game a lot and negotiate back and forth, have lots of meetings. Like sometimes it feels like I'm back in corporate because I'm like trying to like herd the cats a lot. And when it goes well, it's awesome. And when it doesn't, it's really frustrating.
Yeah, man, I can only imagine how would you, other than waiting, to close on the land subject to whatever your plans are, getting entitlements done. What else would you do to maybe expedite that process or just kind of grease the wheels?
I have learned that you don't expedite the process. No matter what you think you can do to make it go faster, the process is the process. It's just government, right? So like you just can't make it go faster. So you basically have to negotiate with the seller to allow and educate them that this is what it takes. And any developer who's worth their salt is going to do the same thing. They're not going to just buy it hoping and wishing that we're going to get the terms we need from the city.
Could you have gone to the city in advance and said, hey, what do you guys want?
Yes, we did. We can, and we did. And they said, we want this. This would be great. Let's annex. And then, like 18 months into the process, like, okay, well, we want you to help us get the financing. That'd be the only reason we actually annexed into the city, is to help, get a what they call a district created to do the financing. And they said, yeah, we'll do that, but we're not going to promise we will. It's like, well, then we're not going to annex to the city.
Right. Right. And you guys wanted to be annexed into the city for valuation purposes, being attached to,
for the financing. The city can help you qualify for financing.
Got it.
Public improvement financing.
Right. Which I'm sure is much more favorable terms than maybe what the street rates are.
Yeah.
Right.
Very much. It's a bond, right? So you raise a bond, and the people who are going to get the benefit of it pay it back over time.
Right. Very interesting. Okay, man, that's a lot. So you got through entitlement. You said, and so now you're what, 2 years in at least?
Yep.
2 years in, you get the land entitled, and then you came to a fork in the road. You said, hey, look, I can sell this, or we can go vertical with it. And
right.
Sounds like you love hard things. Just from
no, like actually, I'm lazy. I like, why did I sign up for this? But then you look at the potential profits. You're like, oh yeah, that adds like a whole nother zero to your profit. And I was like, okay, maybe it's worth it.
Right. Zeros are important. So you decided to go vertical. Like what was the next? I mean, because at this point you're a lot of money in. You're a lot of money and you're a lot of time.
Yeah.
Any idea how many acres is this project?
The whole thing is 36.
Okay.
13 of it will be developed into multifamily, and the other 23 will sell as townhomes. And basically, we'll sell it what they call paper lots. We'll sell those 23 acres to a builder to do the townhomes and the duplexes and whatnot. A build to rent model.
Got it. Got it. Okay, cool. But still, so and even so, you've already gotten all your, like you said, paper lots. I mean, the place is basically drawn up at that point, right?
Right. Right.
Right. I forget what I was going to ask you. It was about amount of money that you're in on a project like this. Like what would you budget if you were to turn around and do this again? Maybe you already are doing this again, but
Yeah, we are. I mean, you need access to, probably tens of thousands, if not hundreds of thousands of dollars to pay for and pay for entitlements and the studies. And like, it's not uncommon for our earnest money deposit to be like 70 grand.
Yeah.
So it's not trivial amount of money. This is probably not something that you stumble into as a newbie having no experience.
Right.
Yeah. And which is what we were newbies and had no experience. So we made some mistakes along the way. But we were, I'm in my 40s, my business partner's in his late 30s, and, we have established businesses otherwise. So this is not like the only thing that we're relying on. This is, I think of business development and kind of like when you come into investing, single family and existing multifamily are more stable and defined, but then you can have these bigger projects that you kind of go for gold. And this is what this is. This is a much bigger play, longer term. And I'm not looking for immediate near term cash flow. This is like life changing wealth potential.
Right. Right. No, absolutely. Clearly, you have the long game in mind, and I kind of suspected the answer to your, I suspected your answer to the question, which was, hey, you could be hundreds of thousands of dollars in. Yeah. On this project by the time you get to entitlement. So we kind of learned plan B of it, where you're going to sell that, the other 23 acres off to a developer. You guys are going to build the multifamily property on the 13 acres. But you liked it so much that now you're going back and you're doing it all over again.
Yes, we are under contract on other projects, and we're negotiating on with the cities to see if they're willing to play ball. And we make a decision right before our earnest money goes hard if the city's willing to play or not. And we've gone under contract on multiple occasions where we've had the property under contract, earnest money approaching, going hard, but we can't get it back. And we have to back out and tell the seller that, this is like, we explain this in the front end that this is a risk of this. And most sellers that own that kind of land are sophisticated enough to kind of get the game enough that they understand. And I was still out money because I paid for all kinds of studies. And, sometimes you can be out 30, 50 grand and realize this is not a viable deal.
Wow, man, that's tough. What you talked about the financing side of things, but what is it like underwriting multifamily? I mean, in today's environment, it's an ever-changing environment, especially as buying land, developing. I mean, that's a long time frame there.
It is.
What's a strategy, or how are you kind of offsetting or compensating for some of that unknown that we seem to have right now?
So we take we pay for market studies, which again could be $5,000 or $6,000, and they provide like a 60-page reports on what's happening in the marketplace given where you are, and they give you a range of what things will rent for. Say a 3.2 will rent for $1,600 to $1,800. So we would run the numbers at $1,500. So we kind of round down. And we do our evaluations based on that, and you determine what your NOI is based on the number of units you think you're going to get, which again is, it's not a given. Like you think you're going to get 200 units, but you only want to get 188. So you do the 80% number of that, and then you do these engineering estimates, which they call an opinion of probable cost, and you really got to understand the assumptions that they're making, because most of the engineers are trying to do right by you, and they make really, really, really conservative numbers, and they make it super expensive. So you have to kind of dial that into reality, which is a whole process to learn. But once you kind of get what your costs of what you think it takes, I went to an actual builder and said, what does it cost to build something? And I said, in today's market, it's $175 per square foot. So budget for $185. Okay. So we budget for 185. And then we determine, okay, like what's the going cap rate to determine the value? Well, we run the conservative side of the cap rate. So in Dallas, it can be as low as 4.5, 5. We run it at 5.5, 5.8.
That's a lot. That's a lot of things to consider there. I love the ambition and the just, hey, we're going to go for it and figure it out. But it sounds like you've done this though strategically. I think that's maybe I'm wrong. Does that sound right?
I'm going to say I did because I can't defend myself in the event that I didn't.
I love it, man. That's really, really cool. One of the other things though that it looks like you've done just from going through our show notes and then talking here before we kick this off was that you've also just focused the side of your business on the capital raising side into other opportunities. Is that still something you do? And if so, why, when you are apparently so busy already on your own deals?
Well, my role in my own deals is that I'm the capital raise and the capital stack guy. So that's my angle. So my business partner is more of the finding the deals and analyzing and dealing with the engineers and whatnot. I'm more of the CFO role, right? So that's where I sit. And whether it's for my own deal that I'm developing or for somebody else's RV park or somebody else's multifamily, I like getting to know investors. I like the marketing side of that because you're dealing with typically very consummate professionals, and they're super curious about the business and that they're not experienced in it yet. And they ask typically very shrewd questions based on their level of sophistication. They just don't know this business yet. And I enjoy that process of hosting webinars and meeting. I do a lot of Zoom calls with investors to understand, what they're after and what their goals are. And like, this may not be a good fit for you, but down the road, there might be something else that is.
Sure. No, that's really, really cool. Anything that you have previously been investing in that you're now just like not interested in anymore?
Yeah. So I ran an experiment for a while though, where I was running with what I call midterm rentals, where I take basically you're focusing on traveling nurses, traveling professionals, and you're using Airbnb to market it. And I still have 3 units I do this with because I've already put the investment and the processes in place, but I don't enjoy that business. That's, to me, is personally exhausting. Like I have just 3 of those, and I spend more time thinking about those than I do the other 40 long-term rental units I have in Little Rock.
Wow.
Right. So it's, even though they're only turning over once every 6 to 12 weeks, we have to turn it over every time because someone has lived there oftentimes for months at a time, and it needs a major cleaning. And so after cleaning, we have to go there and like a look at it and say, is this good enough? And 9 times out of 10, it's not. Like it needs a little bit more. And so we have to get the cleaner back over there, or me and my wife will do the last few minute items. I don't enjoy that part of it. That's not the kind of business I want to be in long term. But it's good to know. I ran an experiment, and it's a great model if you're that kind of operator. I am not that kind of operator, and so you need to know your pros and cons. Like what are you good at, and that is not what I'm good at.
Right. No, that's really cool. I love that, and it's funny how different investing styles fit different personalities. Where it's like,
right,
you know what? There's people. I got a buddy of mine that he loves the midterm rental thing. I mean, that's all he does is midterm.
It's a good business.
Good business. He makes great money. He does it at scale, and that's his thing.
Yeah.
Doing capital raising like what you and I do, and then getting involved in ground up development would not be his thing. So I think that's what's fun about this business. We all get to choose. What has it been like for you? What are some systems that you either have implemented that you really liked, and or systems you're still working on inside of your business that you're refining?
I have found that I am a high startup, low follow through personality. This is like a real thing. This is like somebody came up with those words before I did, right? Like this is a thing that people have, and I am that person. I love deal making. I love deal structuring. I love putting things together, but I don't want to operate the deal. That's not my strength. I'm a visionary, not an operator, right? So I need an operator. And for an example of the midterm rentals, I have completely outsourced the management of that to a good friend of mine. She does an amazing job. She gets 15% of all revenues. So she gets paid very well to do that, and she does a great job. And we still get pulled in occasionally to take care of things. So we're having to train our cleaner, our local cleaner, to look at things the way we would look at things. And so we have created her a checklist. And she's so good that we're afraid to run that by her too much and be too critical because we don't want her to run away.
Right.
So that's something that me and my wife are working on. My wife likes to like fiddle with these things, and to
Mm,
me, it is a money in, money out box. But she likes to make a nice place to live. I care nothing about that. My
right.
wife does. So we have to like marry those two approaches, and my wife can think about what the what kind of flowers that we're planting, and I can think about what the process is, the checklist for the cleaner to make sure that they're cleaning underneath the furniture because people have
Right.
been there for a long time.
Right. 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 Yeah. If you have hardwood floors or whatever, you don't
Yeah.
want to get on your hands and knees and see nothing but dust.
Right, which is what happens if we let just the cleaner do what she would normally do, because she
Right.
turns over Airbnbs that are like 2 or 3 day stays. They don't get that dirty. When
Right.
someone lives there for 6 months, it gets dirty and it needs a full overhaul. So what her checklist for a midterm is completely different than for a short term.
Yeah, absolutely. Absolutely. Very, very interesting. Paul, I love what you're doing. This is, I mean, you got your hands in a lot of different things, everything from long-term rentals, mid-term rentals, land acquisitions, entitlements, now doing, massive development projects. It sounds like, it sounds like you stay fairly busy. This has been certainly enlightening to have you here, come on the show and just share with us today. I appreciate your time. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
The best way to get a hold of me is at my website, pauldavidthompson.com. I think you'll drop that in the show notes, but it is spelled the way you might expect. I say this a lot, but I have a curse of a common name, so I had to use all three of them to make sure I got my own domain, pauldavidthompson.com.
That's awesome, Paul. We share the same middle name. I like it. This is great. Thank you again for coming on the show today. I do appreciate it.
Appreciate it, Sam.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.